reality is that for anyone in the business of stock holding, of service center, or anyone or all the traders with a position taken, these profits have been representative when compared to anything in the last 10 years. However, we have to take into account also that we are coming from an area of uncertainty as was the pandemic, and that the stocks were really short in every part of the supply chain. So when looking backwards, everyone is complaining about this very small stock position that each of us had, and how that is refraining all our companies for having made more profit for such a credit. Another point, another challenge that is in all the distributors and service centers are the costs, because there are increases everywhere. The price increases are not only taking place in steel, they are also taking place in timber, in plastic, in transport. But there is also hidden cost that sometimes when you realize it's a little bit too late, is the differential between the procurement price of a material, whether it's a beam or a profile or a coil, and what you get when you have to scrap a certain percentage of that product in order to deliver to your customers.
The improvement in the economic outlook is also a reflection of an improvement in confidence that had been plummeting due to the pandemic in early 2020. As you can see here, you see the general economic sentiment indicator, general economic confidence, and then on the right hand side the industrial confidence indicator. Confidence in the economy and industry has rebounded very strongly, maybe even stronger than expected after the record falls in Q2 last year, with as I said earlier, an increasingly two-speed economy. So the recovery has been driven by the industry primarily, and confidence has returned almost back to 2017 levels, when the economic cycle was in an upturn, was very positive, particularly for manufacturing. But the thing here in Europe is that really the recovery is industry driven, whereas services are still lagging behind, are still very weak due to restrictive measures still in place, and therefore we expect that probably over the summer of the second half of this year, services will also provide a positive contribution to the economic growth. So expectations for growth are that it should gain speed in the course of this year. This is the evolution of the major steel-using sectors, steel-using industries in the EU. Here we report year-on-year growth rates over the last quarters for the major sectors, that is construction, automotive, mechanical engineering, and also domestic appliances, which show very interesting developments, and also the total sweep, steel-weighted industrial production. So as you can see, the slowdown, which we've seen also in previous webinars and in previous presentations, the slowdown since the second half of 2018 due to tensions in global trade, the slowdown in manufacturing, that has then culminated in the very sharp, very severe falls in output year on year in the second quarter of 2020, which was largely impacted by the pandemic, with shutdown of industries, plants, and also steel mills in Europe. Automotive recorded a record fall in quarterly terms of 51% in Q2 last year, but then since then we see a very strong rebound, which has been very, very strong, particularly for automotive, but also for domestic appliances, which is green line.
Carbon taxes make total sense. I also believe we need a global solution, and the solution that applies to steel industries across the world. I think there is a political will for that. Pollution is an issue everywhere. We'll come to China later, where it is particularly. So there is a global will, but getting the global consensus and getting things moving evenly across the globe will be difficult. And so, for the interim at least, until there is a global solution, carbon border taxes make total sense. Not easy for me as a steel trader, but I have to accept they're the only way forward. Border taxes still make sense. There's been a document leaked recently from the European Union drafting how they might introduce these carbon measures. It's a tremendously complex document, But what it looks as if it's saying is that if you want to import steel into the European Union, you will have to pay a carbon tax at the border equal to the average carbon tax burden that EU steel producers suffer. And that seems fundamentally fair. There are some slight anomalies in it. For instance, you know, if you wanted to import steel from the United States into the European Union, you could import clean steel from Nucor or not so clean steel from Cleveland Cliffs, the former being electric arc furnace, the latter blast furnace, and they would both pay the same tax on import into the European Union, which is sort of counterintuitive, but I think the logic of the methodology is sound and makes sense. So carbon taxes are here, carbon border taxes are here for the future to enable green steel production. Look, it's a very complicated world to navigate, the world of steel today. Safeguard measures, dumping duties, massive freight issues across the globe today. There's a shortage of shipping space. These are all very, very complex issues, and it's very challenging to navigate those difficult waters, and that's what we do. And actually, if you have the capacity and the structure to deal with these issues, you can profit. So most people in the value chain, in the steel value chain today, right the way down from the raw materials through steel production, through distribution, trading, service centers, stockists, even a lot of the end users, sandwich panel makers for construction, cutters and benders in the reinforcing industry, they're all making good profits today. Everybody in the value chain is. The only person that's really suffering is the person at the very end that's paying a massive price for their finished product. As I said, you know, in the US, the price of steel has tripled. In China, it's doubled. And so, you know, the final end use is suffering, but everybody in between is doing quite well. And all of these difficulties are barriers to entry for other people. So those who exist in the trade process, who are there in a trade flow, have a regular trade flow already, and add value in that, they have the capacity to profit more today from that. So it's, you know, it's a good situation for most people in the steel industry today, even if there are many challenges.